Good morning. It's the midweek edition of Business Morning. You're welcome. I'm Ini John Mekwa.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, we'll begin with oil market update as prices fall for a third straight session this morning as investors took profits while looking ahead to U.S. inventories data due later in the day for pointers on where prices will head next. Brent crude for May dropped 56 cents to $66.96 a barrel, while U.S. West Texas Intermediate crude for April was at $63.56 a barrel, down 45 cents. Prices gained support last week from the OPEC Plus decision to largely maintain production cuts in April. They then initially jumped on Monday, with Brent rising above $70 a barrel after attacks by Yemen's Houthis on Saudi's oil heartland before settling back as the alarm subsided. Official figures from the Energy Information Administration are expected later today. Meanwhile, higher prices are expected to bring more U.S. crude supplies back online. The EIA said on Tuesday U.S. crude production is still expected to fall by 160,000 barrels per day in 2021 to 11.15 million barrels per day, but that's a smaller decline than its previous monthly forecast for a 290,000 barrels per day drop. According to analysts at EFG Bank, the Organization of the Petroleum Exporting Countries and Allied Producers may become the victim of its own success, as higher prices resulting from supply restraints could incentivize U.S. oil production. And a total of 253 million naira has been disbursed to 5 researchers to produce local COVID-19 vaccine and other diseases. The Central Bank Governor, Mr. Godwin Emefiele, explains that the intervention aims at promoting intense research and to develop activities towards developing vaccines and drugs against the spread of all other communicable and non-communicable diseases.
Only a few days ago, the nation received 3.92 million doses of COVID-19 vaccines. While that's no longer news, what seems to be the latest news is that 5 researchers from the country's academic institutions have been given grants to produce vaccines. At this meeting, the central bank governor rolls out how the 5 researchers were carefully selected.
We need to encourage our brothers and sisters in the academia so that they can, rather than take flight abroad, they can stay back at home and go straight into research that will help our people. Let me reiterate that the review of proposals is still ongoing, and we expect the committee to provide recommendations for additional award of grants in due course.
While the COVID-19 pandemic exposed the fragility of the nation's healthcare system and the urgent need to look inward and build a more robust and sustainable healthcare system, this latest gesture by the Apex Bank is a good move to reduce importation of vaccines and other drugs into the country.
This modest attempt that is started by the Central Bank of Nigeria would translate into establishing very formidable institutions, so that if we are confronted with another pandemic, that will definitely come. Not in our time, but generations that would follow would be able to look back and say, yes, a modest attempt has translated into a formidable platform of innovation.
Boosting the morale of our own researchers will create a value chain that has ripple effect in terms of more jobs for our citizens, significant decreased overdependence on advanced nations for vaccines and other important drugs, and we can start to reduce the huge capital flight involved in procuring vaccines and other drugs from foreign countries.
And one after the other, the 5 recipients step out to receive their grants. Hopefully, this intervention will offer Nigerians access to the much-needed vaccines and other drugs for the treatment of other diseases.
Thank you very much.
This is very interesting. At least we'll get to have
our own vaccine.
Nigerian-made vaccine.
We're looking forward to that.
I must give it to the Central Bank. They are really living up to expectations in terms of development financing. If you will recall, the central bank governor had made this commitment last year. That's 2020 in May, you know, and it's good to know that some people, of course, have shown that interest and they are capable of doing it. I mean, Nigerians, we really can do
you know, the next thing would be to follow up and ensure that we see the results.
Implementation, and then get the needed results. I'm sure we'll get there.
I'm sure.
All right. The African Continental Free Trade Agreement successfully commenced on January 1 this year, and Ghana is set to have been the first country to export under the trade pact. For Nigeria, the AFCFTA is not only expected to help expand market access for Nigeria's exporters of goods and services, but spur growth and boost job creation. However, to achieve success, the AFCFTA will not only rely heavily on the financial services industry, but development banks like the Nigerian Export-Import Bank to facilitate the liberalization and process. How is Nexim taking up this challenge? The Managing Director and the CEO of Nigerian Export-Import Bank, Abba Bello, joins us next. Thank you for joining us on the program, Mr. Bello. Well, Nexim is a major development bank in Nigeria with a major mandate to promote non-oil export. How much impact has the bank made in this respect, especially when oil and gas sector still account for over 90% of our foreign exchange earnings?
Good morning, and thank you for having me on your program again. Yes, you're right. Oil and gas has dominated Nigeria's foreign earnings since the discovery of oil in the early 60s and into the 70s after the boom. Now, with typical Dutch disease, investments and resources in Nigeria have been targeted at oil and gas sector. That has made other sectors uncompetitive, and export of non-oil products was affected. It was because of that in 1991 that government recognized the fact that there needs to be some promotion of export by providing first an export promotion council and also an export development bank. So Nexim was born in 1991 to finance exports of non-oil products out of Nigeria. How has Nexim performed since then? I'll tell you that it's been insignificant because from then, total non-oil exports in Nigeria had hovered around 5% of total revenues generated from export until 2019, where for the first time, non-oil exports contributed 12% of Nigeria's export proceeds. Now, that was as a result of the focus of the current government of Muhammadu Buhari in boosting first domestic production of our agricultural products and also focus on other non-oil export products. 2020 figures are yet to be out, but I suspect the pandemic will affect this growth. Now, Nexim has always recognized the fact that to boost non-oil exports, we have to scale up processing. We've been the primary producers of the world. All our focus has been on agriculture and unprocessed agriculture, which is susceptible to price fluctuations, damages, and so on and so forth. And we're at the very bottom of the global value chain. To get better value, two things need to happen. We need to keep boosting output, but we also have to provide processing to ensure we get better value for our exports.
So when we look at like what you have said, you know, the work of Nexim Bank and you know, the input so far, and then we look at the AFCFTA, how prepared would you say that the bank is, you know, to help exporters maximize the window that is now open?
Okay. Even before the advent of the free trade area, Nexim has always made it a focus to grow our intra-Africa trade. And I'll give you some statistics. Trade all around the world starts from trading with your neighbors and then growing into the continent before going into the global market. In Europe, 65% of trade is done within Europe. In America, 43%. And in the Asian countries, also about 43–45%. In Africa, it's 18%. So even before Continental Free Trade Area, Nexim has always recognized the fact that we have to boost our regional and continental trade. A lot of it is happening today, but it's informal, on the informal platform. So two ways. First, try and migrate informal trade onto the formal platform. And second, Nigeria already has an advantage of being the industrial hub of West Africa. And we must continue to promote processing and industrialization to grow trade within the region and within Africa. Secondly, the funding. We have had a program that is called ECOWAS Trade Support Program, which is supposed to finance Nigeria's products into ECOWAS. There is also, recently we signed an MOU with Afrexim Bank for $1 billion to support intra-Africa trade, and it's called NATIPS. And it's focused on supporting Nigerian industrialists produce into Africa. There are other challenges that have hampered trade within Africa, especially for Nigeria, centering around logistics, around payments, and so on and so forth. And there are different initiatives that are being handled both by Nexim, Afrexim, and the central bank to ease some of these challenges. And I think the opportunities for Nigerian trade to grow lies in Africa rather than in the global markets.
All right, Mr. Bello, what is the status of the proposed 500 billion naira facility for export?
Okay, I think you're speaking about the NESF, Non-Oil Export Stimulation Facility, and you call it proposed. It's actually already operational. NESF is a facility that was launched by the central bank and in conjunction with Nexim to facilitate and promote actually industrialization and export of Nigerian produce. Is a total of 500 billion at very concessionary rates, currently 5% because of the pandemic, but structured at 9% for Nigerian exporters. It is already operational and is open to all participating financial institutions. Nexim has benefited from it, and some of our projects are being funded from NESF, and other Nigerian banks have also accessed it and is currently running. On the side, we also have another product called Export Development Fund, which has been released by the central bank to Nexim to also support trade and processing of Nigerian exports. The difference between the two is that NESF has a longer tenure, has a bigger single obligor limit that would make the necessary funding needed to boost production out of Nigeria. Both are running concurrently, and so it's not proposed, it's already operational.
Thank you for that correction.
Okay, yes. So exporters are complaining that they don't have access to export their proceeds. What's your take on this complaint?
That is not entirely correct. Exporters have access to their export proceeds, but in like every client, there are legislations and regulations that protect proceeds of export, and Nigeria is not different. What it is that the exchange controls in Nigeria specify that there are certain uses that you can apply export proceeds to, or you can utilize it for your own imports where you can, where you need to import maybe equipment or raw materials. Now, what the exporters are talking about is because the I&E window is converted at a certain rate and the free funds rate is slightly higher, their goods that they purchase for export is priced at the free funds rate, while the export proceeds are coming at the I&E rate. What they're complaining about is that they should be allowed to take their proceeds and sell in the free market so that there will be a balance between what their cost is and what their proceeds are from trade. Now, that is not being bought by the central bank. What the central bank has continually tried to do is to close the gap and ensure convergence between the free funds rate and the I&E window. So it is not right to say that they don't have access to it. They have access to it, but the rates at which they want access to those funds is not what they are getting it at. So I think with more production, with more export, that convergence is going to happen, as I know that the central bank is making efforts to ensure that convergence.
All right, so we're, of course, looking at benefiting from the AFCFTA. Now, is Nexim providing any support for the services, export in this regard?
You know, for AFCFTA and indeed any export to succeed, there are, I would call them challenges as they are right now, but there are things that have to be in place. And some of those things are beyond funding, okay? We can put them in different buckets to say that there is the finance. And as we are today, only 1% of the loanable funds in Nigeria are targeted at exports. So we need to improve that. There are also other challenges around certification, standardization, and so on and so forth. Like I said earlier, different efforts are being put to ensure standardization, to ensure that we have certification for the global markets, which will, of course, include AFCFTA. But we also have challenges around logistics. We have challenges to get goods from Nigeria to West Africa because those logistics are expensive, okay? So one of the areas that we are focusing in our trade facilitation role is to provide logistics, both marine logistics and road logistics, that will make it easier for Nigerian exporters to transport their goods at minimal rate into the regional markets and the continental markets. These are efforts that need to continue happening to reduce the cost of exports in Nigeria. So what do we have?
Thank
we
you
have...
Yeah, Mr. Abba, well, I apologize. We really don't have much time there. Thank you very much, Mr. Abba Bello. We do appreciate your time, and we hope to have you on the show again when it's possible. Thank you. Okay.
Thank you so much.
FX Commodities Market Update is next. And the total value traded on the FX Commodities Exchange in the week of March the 2nd to 8th was up 58.3% at $3.6 billion. naira. The number of contracts traded also went up by 284% at 193,899. Meanwhile, FX Commodities Index, the Export Index, and the deal were in the red. For more, here is Michael Martins, Portfolio Manager at FX. Good morning, Michael. Thank you very much for joining us on the program. Well, first take us through activities at the commodities market in the week under review. What is the cause of the recent upsurge in market activity on the exchange?
Good morning, Chimezie. Thank you for having me once again. So if you look at the table in front of you, you would notice that there has been significant market activity occurring in the exchange over the course of the week, particularly with the total value of transactions, right, going from 3.6 billion to around 12.1 billion naira. The total number of contracts also went up by 284%, right, from around 193,000 contracts to more than 740,000 contracts. The total number of deals, however, fell by 21.13%, from around 194 deals to close the week at 153 deals. The ACI, which is the FX Commodities Index, also had a negative week, going down by 0.89% to close the week at 398.79, while the FX Export Index, which is the AEI, also fell by 1.29% to close the week at 160.69. If you look at the next table, the next chart in front of you, speaking to the volume of contracts traded on the exchange over the course of the week, you would notice that there has been, or rather that there was, significant market activity on the exchange, particularly with maize growing from around 170,000 deals to more than 700,000 deals on the exchange. Soybean also traded up in numbers over the course of the week, whilst paddy rice and sorghum traded a bit less. If you look at the export commodities from ginger, cocoa, and sesame, you would notice that there hasn't been significant market activity, especially with regards to volume going over with export commodities on the exchange. And with cocoa in particular, you would also notice that the reason why that is because the main crop season has sort of exceeded, which usually starts from the month of October and then ends at the month of ends in the month of February. So what we're seeing in the market currently is just an introduction of light crops, causing lower market activity. With regards to pricing, the only major gainer that we had in the week was soybean, which went up by 1.76% to close the week at 31,644 naira per contract. And the losers for the week were essentially paddy rice, ginger, and sorghum, which went down by 3.74%, 2.50%, 1.61% respectively. The only other asset under consideration is the fair trade exchange traded commodity, which lost 1.01% to close the week at 14,161 naira per contract. With regards to the upsurge in market activity, and you would notice if you go back to the volume chart, there was significant market activity, particularly with maize, and that's partly due to the fact that I'm pretty sure we've discussed some of this during the program before. The asset-backed commercial paper that we issued a couple of months ago. So a lot of that volume is now currently going through the exchange, causing an upsurge in maize in particular.
Well, thank you so much, Michael, for that review. For retail and institutional investors who want to partake in the commodities market, how does the commodities market fare in comparison to other traditional asset classes like the stock market and fixed income? How does it compare to these?
So if you were to compare the different asset classes, so just using their indexes, right, as a proxy for what is going on or what has gone on in the market, right? So, for example, in the commodities market, we tend to use the ACI and the AEI as a proxy for the commodities market, and the year-to-date return for the ACI is somewhere around 24%, and for the AEI, which is the FX Export Index, is around 13%. If you compare that with what you currently have in the Treasury bill market, depending on the tenure that you're looking at, right, you're looking at rates between 2% to 6.5%. And with the stock market, you'd essentially also be looking at the NSE All Share Index, which is down year to date. But that's just a competitive comparison. For people that want to invest in the commodities market, whether or not you're a retail or an institutional investor, the commodities market right, represents an alternative asset class that enables you to balance out your portfolio. So, which is why I said beyond even the competitive asset class comparison, you can then begin to design a portfolio that you understand that is balanced, such that when one asset class is going down, the other asset class is going up, and then you can then have a competitive return, risk-adjusted return on investment. But beyond that, right, that's just a financial implication. When you're investing in the commodities market, because the commodities market is so correlated and it contributes a significant portion to the gross domestic product, every single naira that goes into the commodities market contributes significantly to the broader economy. But beyond that too, right, every single wealth that goes into the commodities market, a portion of that wealth is transferred to the smallholder farmer who cultivate every single season, year on year, right? So, and every single naira does so help to improve his livelihood and income. Now, I don't know about you, but I don't know that many an asset class where you get to make a lot of money and also make impact at the same time.
Right. So, okay, Michael, tell us a bit about the common trends in the commodities market, particularly with grains and export commodities.
And this is speaking broadly, because I don't believe that we have enough of a time to go into the detail of each respective commodity. If you're looking at grains in particular, right, you notice that their season tends to start around the month of October, which is when you see most of that harvest volume come into the market, and it sort of draws down over, let's say, arguably between an 8 to a 9 month period. Now, for people that want to invest, whether or not you're a financial player just looking to take a position in either the spot contracts, or you're a processor that you're looking to gain significant market exposure so that your own cost of production is low, ideally the harvest period is when you want to partake in the market and take a lot of your positions, because essentially what you tend to see over time is that you tend to see supply reduce, because when you see the supply volumes, is usually not in the same. It's usually not in the same volume with what you would see at harvest. So what you see is that supply would dwindle over time, and then demand very usually outweighs supply, causing by the simple law of economics, causing prices to rise over that 8 to 9 month period. But for export, it's more or less the same thing. There are just a few slight differences that you would see in comparison to grains.
Okay, just before we let you go, explain to us the dynamics involved in the Fair Trade Exchange Traded Commodities, the FETC, which you mentioned, during the review.
So the FETC, rather, it was an innovative financial product that we came up with at the exchange in order to allow retail and institutional investors gain exposure to the commodities market. So as opposed to just taking singular positions in spot contracts, which had an arguably a high risk adjusted return on investment, we wanted to create a product that would allow retail and institutional investors gain exposure into the market. So the way the FETC is sort of designed like a basket of commodities that you can take a position in, as opposed to just taking a position in an individual commodity. So that's essentially the dynamics of the FETC.
All right, thank you very much, Michael. In the meantime, to review how the commodities market performed in February, including factors that might have affected the market, as well as discuss the outlook for March and the potential market forces that will affect the market, Akiyinka Akintunde, Vice President, Financial Markets at AFEX, joins us now. Good morning.
Hi, good morning.
So the Nigerian investment, you're welcome. The Nigerian investment environment, of course, is currently characterized by a not so good yield environment in the fixed income space and a bearish stock market. How is the commodity market faring amid current market rout?
I thank you for that. I think the commodities market is quite unique in the nature of its in its nature by default, right? Partly because, firstly, if you look at the commodities ecosystem, it's seasonal, right? So it brings with it a natural reset in prices, right? Which allows market players to price in necessary expectations on the macroeconomic outlook, inflation position, and all those into the commodities prices. Now, we've seen a lot of participation by market players in the commodities ecosystem. Firstly, because, as you all know, agriculture is one of the key drivers of GDP in the country, so you expect to see much more investment there. However, we've seen little financing by players or from commercial players in the sector over the recent years. So there's need to also bring in more players there, which is why more players coming in will also affect the dynamics of pricing there. The other key part of it is because the the commodities as we have it right now are very, very integral to the livelihood of Nigerians, right? So you see the smallholder farmers that are cultivating bulk of these commodities solely depend on their livelihood solely depends on these commodities. As such, it's expected that activities will always be increasing in this sector. On the other side, you'll see that the seasonal nature of these commodities makes it susceptible to potential astronomical prices over the course of the season. So, for example, at harvest during November, December, you'll see prices at their lowest. Then over the course of the year or over the course of the season before the next harvest, you'll see prices going up until they get to their peak. Now, this is a natural occurrence of the commodities ecosystem, which is not obtainable in the equities and fixed income markets, which are more driven by sentiments of investors in terms of their perception of the firms that they are invested in or the performance of the instruments they are investing in. Overall, I think the commodities ecosystem offers more a complementary asset class that helps investors in the capital market have a balanced view or a balanced portfolio that ensures that the volatility in the markets is well cushioned and gives them a fair return for that risk they are taking on board.
Well, thank you so much. Well, when Michael was doing the review, he talked about the ACI and the AIE. So what factors would you say are responsible for the positive performances that are recorded in the ACI and the AIE in the month of February?
Naturally, or typically in the month of February, annually, you see higher increases in price of these commodities. This is due to the fact that most consumers of these commodities already stockpiled earlier in the season, November, December, and right now they are restocking or they are repurchasing assets that they need for their production activities, which is why they will be in this market and price of these commodities are likely to go up. And this is typical for local commodities. On the international space, the dynamics is similar but much more predictable because most of the players in that sector already have positions on international exchanges, which they are fulfilling the contract by buying locally and fulfilling the contracts they have internationally. Now, this balance is always what we see at this point in the year because a lot of players are going into the market and buying up these commodities. And the trend is always by March, April, you will now see a decline because more farmers are coming into the market to sell their commodities. And when they sell their commodities in preparation for a new planting season, you will now see these prices going down. So yes, the ACI and AEI recorded impressive performance in the month of February. It may not be sustained in the near run. We'll see it moderating in the next month before it picks up again by April, May.
One before I let you go, what are the major infrastructure gaps in the commodities market and how is AFEX bridging these gaps? A quick one.
Infrastructural gap is one of the issues that is limiting the potential of the commodities ecosystem and the agricultural ecosystem as a whole. So, for example, absence of storage infrastructure. We keep saying this, but it's not receiving the much deserved attention. So there's a term we use at AFEX which we call the absorptive capacity of our storage facilities, which basically speaks to the total capacity you have as a nation compared with the value of or the volume of commodities you produce internally. Now, if you do a comparative study with South Africa close to us here and the US, you'll see an 85%, 95% respectively in terms of storage absorptive capacity. But when you come to Nigeria, you'll see this value below 1%, meaning we don't even have enough infrastructure to cater for what we're producing. And this has a lot of ripple effects from a lot of food losses at harvest to the fact that we are not food secured yet as a country. We don't have a full year stock that could cater for us in case of any external exigencies. This is a huge infrastructure gap that needs to receive more attention. On the other side, we see more gap also in the technology space, right? Pricing of commodities, a stable system that ensures that there's transparency in pricing these commodities across the nation. And these are all infrastructure that AFEX is putting its weight behind to see how, as a country, we can develop a system that consistently provides a transparent and investable market that investors can come in to develop. I spoke about storage earlier. In developing this, you don't necessarily need the government to be the one to do it, but when you create an environment in which investors could come in through the other asset classes to develop it, then you see an increase in the availability of these storage spaces that drives the local capacity for us to produce more and then be more food secured as a country.
All right, thank you very much, Akinka Akitunde, Vice President, Financial Markets at Apex. We'll take a moment. Okay, let's look at the market now. Eddie, well, the Nigerian Stock Exchange has just received the final approvals of its demutualization plan from the Securities and Exchange Commission and, of course, the CSC, meaning the exchange has now completed its demutualization process. But would that change the negative trend in the market?
Good morning, Jimmy. Well, I don't know if it will change anything in the market, but it's good news for the market. I mean, the NSE has been on this since, 2011? So this is welcome news. If it were to affect trading in the market, I'm not sure how, that would affect sentiment on MTN or Airtel, for example. But then this is really good news for the market. With these approvals, it means that the NSE can go ahead with its plan to become a holding company with 3 subsidiaries as the NGX Exchange, the Nigerian Exchange Limited, which would be the operating exchange, the NGX regulation, which would be the... Yes, you can buy the shares. So with all these in place now, the NSE will be able to list its own shares on Nigerian Exchange Limited. Yeah, and have a quick quote from the NSE Council President, who said that this was one of his fundamental objectives when he became president of the exchange. He also went ahead to talk about how this is a milestone that has been achieved as they celebrate the 60th anniversary of the commencement of trading at the exchange. And now they're looking forward to the future public listing of its shares on NGX Limited. So this is very good news for the capital market generally. I mean, in 2019, we saw FMDQ become a holding company, so this growth is very good for the capital markets. Hopefully, we'll see some more of these from the commodities ecosystem as well. But that question you asked me about investors, I'm going to throw it to Mohammed Jamil, a stockbroker at APT Securities Limited. Good morning, Mr. Jamil. Thank you for joining us on the program.
Good morning, everyone. I'm happy to be on the program with you.
Was happy to have you. Well, I'm sure you're also really happy about the news of the NSE's demutualization plans being completed. What do you make of it? And just like Chimi asked, is that going to change sentiment in the market?
I'm very happy. I'm very excited to be here. To have the information. To have it. Demutualization is something that the market has been waiting for more than 12 years now that we have been, they have been on this demutualization. Apart from the fact that we want to see to be able to compete with other exchanges globally, you will see that it will enhance the corporate governance of the exchange and also access to capital for funding strategic development. It also ensures if the exchange is being demutualized.
Okay, I think we've lost Mr. Jamil there. But then, Chimi, we'll just wait and see how the markets react to this. And hopefully that can change these reds we've been seeing in the market today.
I just hope it does, particularly when people perhaps begin to, if the NSE is listed on the exchange, and then people begin to buy some of their shares. Maybe that could help. Let's see how that goes. All right, we take a quick break again, and when we come back, we do an opening call to London.
And for updates from the streets of London, let's talk to Juliana. Hello, Juliana. Good morning.
Good morning, Ine.
Yeah, so air passenger duty is set to be cut on domestic flights after the Prime Minister signaled his support for reform to bolster air links around the UK. How much impact will this make in the aviation industry?
Well, absolutely. lots of impact. That's because air passenger duty, the abolition, or the reduction of it has been a long-standing conversation in the UK, even before the crisis of COVID hit the airline industry. This isn't, though, just about air passenger duty. It's also about rail, road and port duty. A report has been filed by Sir Peter Henry, and he has put it into the government this morning, basically looking at ways that connectivity between the UK's four nations can be improved. Boris Johnson, the Prime Minister, has finally given it the green light. And I suppose one of the main reasons why air passenger duty sticks out like a sore thumb is because we know that the industry has been so embattled over the past couple of months due to the COVID crisis. And also, if you are travelling by air in the United Kingdom, you end up paying more than you would if you were flying to Europe, because you actually have to pay it on both inbound and outbound flights. One of the issues Boris Johnson will have is about his target to reach carbon net zero emissions by 2050, because, of course, if you make it cheaper for people to fly on air, then you release more carbon emissions into society.
Well, MPS has accused the U.S. Financial Conduct Authority of failing to protect businesses and investors swept in the collapse of specialist lender Greensill Capital. Now, they're saying that the crisis draws yet more uncertainty over the efficacy of the city regulator. They also say that it's time for review of its powers. What's the talk around this?
Well, yeah, we first spoke about this story on Monday, but it was last week that Greensill Capital fell into issues. They're a massive lender. They're headquartered in Australia, but they've got a big base here in the UK, and they lend to quite a series of really high-profile lenders, one of them being the owner of Liberty Steel, which employs about 35,000 people across the world, but 5,000 people in the UK. They got into trouble last week because some of their big lenders, including Credit Suisse, withdrew their support and their funding, which led to them filing for insolvency on Monday, which will put these jobs at risk at a time when manufacturing and steel in this country is really embattled at the moment. One of the major reasons why the Financial Conduct Authority, the FCA, has come under fire is because over the past 10 years there's been a series of scandals. I think most notably is the collapse of London Capital and Finance. That went under, owing people to the tune of £236 million. There were a series of investigations ongoing, including by the Treasury Select Committee, and they have found that the FCA are pretty much culpable for allowing many of these issues to go under the carpet. Andrew Bailey, the current governor of the Bank of England, was heading the FCA at that time. And again, we have the same issue with Greensill Capital. MPs not happy that they had spotted some of these warning signs as far back as 2019, tried to approach the matter in Parliament. They seem to get brushed off. And again, now we've seen a major collapse of another big lender, which could see thousands of jobs go.
So more than 300 jobs are expected to go at Evans Cycles, and hundreds of remaining store staff are to be switched to zero-hours contracts as Mike Ashley's Fraser's Group aims to slash costs. This is despite booming trade for bike retailers during the pandemic. Why is Evans Cycles taking this step?
Well, we haven't actually had a comment from Fraser's Group. This story is being reported in The Guardian this morning. But you're right, you know, cycling has definitely seen a surge over the past 12 months as people have been reassessing the way they live their lives. Cycling retailers have had a boom, and Evans Cycles were in trouble. They were in trouble in 2018. They went into administration. Fraser's Group pulled them out of administration, and they seem to have been doing well. But according to The Guardian, a note was written to staff a couple of days ago, basically saying that management will now have to work more hours. They'll be shutting some stores, and many staff will be re-employed under these zero-hour contracts. I think this is a major issue because Mike Ashley, the billionaire, pretty controversial billionaire, a couple of years ago was in the headlines for these zero-hour contracts. MPs are not happy that people were working in unsecured jobs. He vowed at that time to cut them and re-emerge as Britain's best employer. But unfortunately, a year later, the company said that they would be reinstating these flexible contracts because people seem to like them. Well, according to the staff at Evans, they're not happy with this new working arrangement. But as I said, we're yet to hear a comment from Fraser's group.
Well, sure, Juliana, I'm sure at noon you will be talking to Ladi, giving us more updates there. Okay, let's look at the Bitcoin, or rather the cryptocurrency market. Well, I keep talking about the Bitcoin, Ladi.
Yeah.
That coin is pumping. I'm sure institutional investors are putting in a lot of money.
Yeah, bullish news coming in from new institutional investors pushing the price because they're trying to, hedge their investments against inflation. So for them, Bitcoin is the answer to that. Look at the market cap, $1.67 trillion, up 1.09%. The 24-hour volume, $131.80 billion, down about 0.68%. Bitcoin dominance, it's 60.25%, down about 0.30%. Let's look at price of Bitcoin at 8 a.m. this morning, trading at $54,191. It was down up 0.15% at that time, but now it's trading about $55,000. We have a 24-hour volume, $49.015 billion. Let's talk to Olumide Adesina now, financial expert. Hello, Olumide. How are you doing?
Yeah, hello, Ladi. Good morning.
Good morning. Great to have you. I see Bitcoin is moving this morning. What's going on?
Yeah, we're not really surprised. Credence to the bullish rally that has been happening in a couple of days. Don't forget that we spoke about the 1.9 trillion filtering into the market. But recently, the world's most valuable bank, I'm talking about JP Morgan, recently announced they were creating an investment unit where investors will have the option of investing in companies that are having a direct exposure to, direct or indirect exposure to Bitcoin. And the investment unit is scheduled to take hold on April 6th of next month. And what it means is that you could get exposed indirectly to Bitcoin, and that obviously is going to trickle in more attention on the world's most valuable crypto asset. And we already see that.
Sorry, Olumide, when you talk about exposure, that means you don't have to own Bitcoin.
Yeah, you don't have to own Bitcoin. Yes, you're just owning the companies that have exposure to these assets. Like we're talking about MicroStrategy, we're talking about Tesla here, but Tesla is not on this list. Companies like Square, Riot Blockchain, Nvidia, PayPal, they make the list. And the reason for this is that they're looking at companies that have so much proportion to their Bitcoin exposure. If you look at MicroStrategy, for example, they bought about 91,000 Bitcoin. So the value of that investment note means that they hold a 20% proportion there, followed by Square, Riot Blockchain, then talk about Nvidia and PayPal. So what in essence it means is that traditional investors that don't really want to invest in crypto assets can use the investment notes to track the world's most powerful crypto assets. So that's why you see that the rally is still going on. The credence, the bullish one is still, and also other data that is helping Bitcoin at unprecedented levels, the number of institutional investors holding the assets. Recent statistics shows that the number of Bitcoin on crypto exchanges have plummeted to record lows. In fact, it's getting very hard to buy Bitcoin at proportional level, and you can see that that's why miners currently are earning so much. So,
all right, Olumide, quick one. Olumide, quick one. So the institutional investors are going for Bitcoin. What's happening with the altcoins?
The altcoins for now, I think it's growing, but you can't compare the fact that Bitcoin happens to be the flagship and the fact that Bitcoin started this crypto journey, and other assets, for example, Ethereum too is gaining exposure, Cardano too is gaining exposure, but you can't the dominance, on the crypto market, for example, Bitcoin has about 60%. So investors will rather key on things that are more liquid than other assets. But Ethereum is gaining ground. Ripple XRP in certain quarters is gaining ground, though it has regulation issues with it has some legal issues with SEC. So we're trying to see that other assets keep up. Please.
All right, Lumide, thank you so much. Always great to have you as always. Thank you. Do enjoy the rest of your day. All right, Chibi, there you have it. Altcoins not doing too bad, but the institutional investors are going for Bitcoin.
Absolutely. Let me just said it all. So, I mean, for retail investors like you and I, and we shouldn't just look that way of Bitcoin. That counter is like for the institutional investors.
The big guys.
Yes, that's why that counter is pumping the way it is. But then I think there's some prospects in the altcoin.
Oh yes, there's always prospect with altcoins, but also the thing is with Bitcoin, you can always still make profit, but it's risky. You don't want to buy the top, and you don't want to miss out on the pump. So
and you would always say that's not a financial advice.
Not financial advice at all.
And I guess not financial advice.
Not financial
but I'm sure
advice.
you're looking at.
But I'm always looking, and I'm looking at the
those
altcoins yes.
right now.
Yes.
Okay, that's it on the program. Thank you for watching. I'm Chibeze Obi Iwago.
And I'm Ini John Mekwa. See you tomorrow.